Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day. In today's video, we are taking a look at the macro and the short-term charts, as well as the total cryptocurrency and total altcoin market cap. We'll be diving into exactly what has happened over the past 24 hours and what needs to happen for the price to continue upward. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is what you're interested in, join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. You'll get access to two channels. The main VIP channel where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, and exclusive analysis, as well as our multitude of group chats, from the general chat to the news chat, to the trading chart education chat, to the daily video help, and everything else we have to offer. Again, you'll get access to two channels of over 700 members. If you were interested in getting access to that, click the pinned comment of the free channel, click my name to contact me, or the two links, the first one being a 50+ month trading track record, and the second one being a 10+ minute video showing you inside the channel. Check it out, guys. We'll see you in there, and let's jump into the video. So as we can see over the past 24 hours, and what we warned about in yesterday's video essentially came true. We warned you that this rally we saw post CPI all the way up to 98,000 was not enough to confirm the market was going to see a reversal, as even though we saw a fantastic move upwards, we did not break through that prior lower high resistance for both Bitcoin, and if we move over to the altcoin market, we can see respectively on that smaller time frame, the altcoin market as well failed to sustain above that horizontal resistance, meaning although we saw a nice move upwards, the price didn't break through any critical structural levels of resistance, which would dramatically shift the probabilities in favor of directional continuations up on the short term. So we had seen a correction. In today's video, we're going to be discussing, well, what happens next and where can Bitcoin go from here and what needs to happen. So we'll get into the short term, but let's start on the data. 24-hour volume came out. It is 164 billion, down 23%, with liquidations down 44% and 175 million. Of the 175 million, 119 million long liquidations with 55 million short liquidations. Moving over, the DXY have seen a dramatic correction. However, we are backing to retest this prior high time frame support. This is both the yearly low and a support that has spanned since November 2022. So it's both a yearly low and a yearly level of support. Provided the DXY is able to hold here, we could see continuations back upwards. If we do fail to sustain above this region, we will be in store for quite a large correction for the DXY, which could bolster the risk asset market. Remember, the DXY is a negative, or should I say inversely correlated to risk asset performance by a correlation coefficient of around 0.7. That means not all the time do we see the market inversely move. Sometimes we see it move in the same direction, but around 70% of the time we do see the DXY on a bigger picture, on a macro scale, right? These directional swings, we see the risk asset market move on an inverse basis. That means not the short-term daily candles, but these massive swings up, or these swings down, or these swings up, or these swings down, generally see the risk asset moving inversely to that. Okay, so looking at the DXY, if we want to see the DXY continuing higher, we're looking 114, 112, we need to break above that weekly high. So these are the two critical levels we are watching. Essentially, we are developing a potential range. We are watching for a breakdown or a breakout, and currently we are at support. Moving over to the S&P 500, again, we need to see that momentum shift occur here on the weekly to be confident the price action will continue upwards. All in all, we have seen a steady grind upwards here. We do have downtrending momentum, but we can see we are to some extent absorbing that selling pressure while we are still creating these higher lows. So all in all, it's not looking horrible, but we do need to see that positive momentum shift to be confident that this trend is going to continue upwards. Now, before we get into the content, make sure to head down to the pinned comment and sign up to BitGet, BitUnix, or BingX. These are the exchanges I personally trade on, and by clicking those links and signing up, you'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. So support yourself in your trading, support the content, and support the videos. Check it out, sign up, and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. We're going to keep today's video short and sharp and smash through everything. So starting on the altcoin market, as we mentioned in yesterday's video, for the altcoin market to see a continuation back upwards, we need to break through this $910 to $915 billion resistance. This is a resistance now that has spanned back essentially since the beginning of this month. So around about 2 weeks now, which has acted as a critical horizontal level, basically a neckline of this sideways consolidation following what was a massive liquidity flush. We can see both on the hourly and the 4-hourly, this level is a level of significant resistance, and if we are able to break through, it is likely we are going to move into that 200 moving average, potentially up into 960, 970 billion. If we're zooming out to the daily chart, the key levels we are paying very close attention to are both now the downtrend on the RSI, this being a level representing momentum since the top at 1.14, 1.15 trillion, a level of which, if broken, will signify that during this consolidation, during this sideways price action, the buyers are back in control and will have the strength to push the price back up into these highs. Now, as we can see, the RSI is downtrending into around about that end of March period, and this last 70% region is generally where we do see breakouts. So I am not expecting an immediate breakout for the altcoin market here. I'm not expecting the RSI to break out immediately, but I will be expecting that to occur most likely sometime during the month of March. We will be looking for a positive momentum shift where we could see some strength flow back into altcoins. Overall, regardless of the time frame of how these things develop, the critical level we are really watching is going to still be on the weekly chart. This, of course, is going to be the yearly level of resistance, which has now flipped into an area of support. This is an absolutely critical level of support in which we will need to sustain above to prevent further corrections. In fact, if we go over to the Bitcoin chart to the weekly, we saw a very similar reaction at a very similar level. This level was going to be the dead cat bounce prior high on the weekly chart, which we can see after the 2021 top, we had that correction, the dead cat bounce high. This became a yearly level of support, and we wicked into that region before we saw continuations. So we can see how these support resistance flips on the higher time frame can often lead to macro trend reversals, provided they are able to sustain. So provided the total altcoin market is able to sustain above 840 billion at the minimum on the weekly chart, it is going to be assumed that we will eventually see some sort of recovery back to altcoins. Will altcoins enter a parabolic phase? it is unlikely we enter a traditional parabolic phase to what we saw in 2021 or 2017 as a consequence to the space being massively diluted with, 100, maybe even 1,000 times more altcoins this time around. But it will likely see a period of time where we see strength move back to altcoins, we see Bitcoin dominance pull back, and we see money rotate back to altcoins temporarily like we usually do. So that is still expected provided 840 billion is able to sustain. Now, if altcoins are wanting to really take control and we want to see Bitcoin's dominance really drop, the $1.13 trillion level is the level of which we will need to break. So those are the key levels we are watching on the short term and on the high time frame, which we recommend checking out. Moving over to the total market cap. This is going to be a representation of cryptocurrency as a whole, and similar to the altcoin market, there is one critical level we are watching on a horizontal basis, and that is going to be the prior 2021 high. This level of support sitting at 2.9 to, or should I say 2.8 to $3 trillion is of course going to be that 2021 top. Now, provided the 2021 top is able to sustain a support, we will likely see continuations into brand new all-time highs. However, if we close a weekly candle below this region, that could confirm deviation with a negative momentum, a bearish divergence, which would signify we have the weakness required to see continuations downwards. Generally, when we see deviations print after we have again bearish divergences, that is going to be a reversal signal. When we're trading on the short term, that is what we use to pin reversal points. So on the higher time frame, that concept will still apply. That will print a reversal, and that would indicate lower prices are likely. So we definitely want to see the total market cap sustain above this gray box at around $2.8 to $3 trillion. If we are able to sustain here, cryptocurrency has hope for continuations higher. Wanted to get that out of the way nice and quickly. Moving over to the higher time frame, as we can see, the price action has now been consolidating underneath the 50 EMA, which is this red line, for around about a week and a half. Now, the 50 EMA is going to now be acting as a trigger of sorts, which when broken will tell us and indicate to us that the buyers have shifted control on the short term. Now, the 50 EMA lines up with that $98,000 region, which we know to be the horizontal level of resistance, marking out our equal high and our lower high of which we need to break to see continuations to this higher time frame downtrend. So we know on the daily chart, if we see a break on the daily above that 50 EMA and we close above the 50 EMA, to us that is going to signify that buyers are back in control in the short term, and we will likely see a directional continuation into this weekly downtrend. Now, as we just mentioned, the 50 EMA lines up almost perfectly with this horizontal resistance, and therefore they are two of the same. A daily break of the 50 EMA will as well confirm a breakout of this prior horizontal high and will validate a continuation upwards. That is what we need to see for the buyers to get in control. As we can see, we have developed a new POC around the current price action, with both the POC signifying, again, the VRPV signifying a massive drop in volume as we approach the downside here and as we break over 98K. So we have this horizontal range we are developing here on the daily chart, which will essentially determine whether or not we see a correction back into 92, or if we're going to see that continuation through that downtrend and back into these prior highs. And all of that is going to be resting on whether or not we see that daily break of the 50 EMA, or whether or not we fail to sustain above these new and recently developed lows at that $95,000 to high $94,000 region. Let's come back to the short term in a second and zoom out to the daily chart. As we've mentioned over and over now for many, many weeks, we are in a daily channel. This is a daily consolidation range. Ever since we broke into it and we've created our two tops and again retested this base of support numerous times. During the last, month and a half to 2 months, ever since we've been in this consolidation, we can see momentum has been pushing downward. For us to be confident this range will break toward the upside, we need to see that RSI break outwards, and that would indicate absorption has occurred, the selling pressure has been absorbed, and the price action will continue toward the upside. Essentially, buyers are back in control. Until then, this is not any sign of the fact buyers are back in control. In fact, what we are still seeing is weakness, But this doesn't necessarily mean we are going to see continuations lower. Exhaustion after the fact, after we see these massive explosive moves upwards, is expected. If we look at this momentum here, what would you expect from a logical perspective? We saw a dramatic shift in volatility toward the upside, which increases bullish momentum, only then to see direct and immediate sideways consolidation. What do you think volatility will do? Volatility will begin to drop, which is what we are seeing here between the 200 moving average and the price action. The distance between those are beginning to decrease, and of course, momentum is falling. So this isn't a consequence. This isn't a consequence or an indication that this is necessarily bearish, even though you could mistake that to be. It is a consequence of the dramatic change in volatility over a period of time, from a period of which we had a massive increase in volatility to a period of now where volatility is decreasing, which is then represented by decreasing momentum. So if we had to translate that into what we would consider, actionable information and what the buyers and sellers are doing, it simply represents that the demand for Bitcoin at these lows are still here, but we do not have confidence or enough strength to break the current highs and continue, hence why volatility is drying up, volume is drying up, and momentum is falling. But if we are able to see a momentum shift and there is a dramatic change in the demand of buyers, we could likely see that momentum follow through, which could take us through the range high. As I have already said from a contextual perspective, the reason why Bitcoin is in this horizontal consolidation is a direct consequence to the indecision developing around the monetary policy. Now, the monetary policy, which is again future interest rate decisions, was primarily and mostly only going to be determined by how inflation was progressing towards that 2% target. But now we have things like tariffs which come into effect, which can impact inflation and thus impact the interest rate decisions. And all of those updates coming from the new presidential administration has kind of shaken the Federal Reserve a little bit and, made it a little bit more difficult to project how they are moving forward with these developments. So with this uncertainty developing from a monetary perspective, which directly influences interest rates, the cost of debt, the strength of the dollar, and thus the prevalence towards risk assets, we see the decisions of individuals become more uncertain, which is buying and selling, and thus we see the price action move sideways. So this cluster of price action isn't abnormal, and it definitely isn't confusing. It is annoying that we're moving sideways, but it isn't confusing and it isn't unexpected. It is what it is. The market sometimes has periods of consolidation, and the market is cause and effect. So we can understand why this is happening. We can then zoom out and realize that we don't need to pay too much attention to the short term. We need to understand, what are the consequences of these directional breakdowns and what could trigger the dramatic shifts in sentiment, which we would need to see directional breakdowns. Now, from a structural perspective, again, if we lose these lows, we are most likely going to see strong corrections, as a loss of this low would result in the total market cap losing its low, confirming that deviation and confirming that reversal print. So we do not want to see that. Of course, losing that low on Bitcoin will basically enter a high time frame downtrend, whereas a breakout above this region here will result in direct continuations toward the upsides. We're watching very closely on that as well. Moving over to the short term, as we mentioned, a break of 98,000, the short term will trigger a continuation toward the weekly downtrend, and a weekly break of the downtrend will result in a continuation to what I think would be a brand new all-time high. That is it, guys. Thanks for tuning in. I hope you have a fantastic day. We'll catch you in the next one on Sunday. See you then.